What's going on, guys? My name is D. Anthony with evolutiontraders.com. What I'm going to be doing is breaking down my SPX trade and showing you guys the power of options flow along with your strategy and how you can kind of incorporate this all together. Now, I've been using options flow for quite some time. I like to see the flow. I like to see, what big money bets are coming in, especially when it's correlating with a level of supply or a level of demand or a specific pivot that I have. It works perfectly. If you start seeing, in the money, out of the money, near-term expiration, meaning expiring today, expiring on Friday, and you start seeing them hammer with big money options bets, and I'm not talking about a $20,000 bet, a $50,000 bet. I'm talking about $100,000, $300,000, $500,000, $1 million. When you see the tape be slammed with big options flow, you know that a move is coming. So with that being said, looking at the SPX play here, I did take $1,200 on this trade and I had the 44.05 strikes. Now I'm going to kind of show you exactly why I took those strikes and how we're going to be able to get into it. But with that being said, if you look at my chart, this is a 5-minute time frame chart. I'm starting it from 7:30 just so I can make sure everything kind of fits on the screen here. And you can see the overall trend is bullish. We are kind of riding higher. We're kind of taking out these levels of supply. And then getting into this New York lunch hour here, we start to consolidate, go sideways, go sideways, go sideways. And then you see here we get a first close below the 20-period moving average essentially all day. If we go back all the way to 7:30 in the morning, we go here to around 10 a.m. Pacific Standard Time. This is the first close below the 20-period moving average. Now, one thing that you have to kind of identify and understand, because I teach change in trends with the 20-period moving average and kind of using them. The big key takeaway here is we need to stay with the direction of the overall move. So what would I be thinking in this particular situation? I'm not going to essentially take this first setup to the short side just due to the fact that we closed below the 20 SMA, because this is the first time that we've closed in an uptrending market. The overall market has been bullish. They have been buying up the dips. So what I want to see here is I want to get a little bit of a back test, and I'm looking at the linear regression here. I'm looking at the Bollinger Bands. I'm starting to see where potentially could we be heading. Now, if the trend, the overall day's trend is broken, then I will be looking for a short position, and that overall day's trend would be broken if we lost the 50-period moving average. Now, that's not to take away that if you are going to be a scalper, there was money to be made here, even on the strategy that I teach as far as taking the 20 SMA plays. You could have taken this short position, and if you would have understood where your levels of demand were, you could have sold for a little bit of profit here. But you always have to understand that, hey, I'm trying to short a market that is going higher. So it's a little bit more difficult to do that. You want to look for the bounces off those kind of pullbacks. So even if you were to take the short position here, let's say the 44.06, it came all the way down to a price of 44.02. So you would have took 2-4 points depending on your position sizing there. Could have paid a little bit, but you would have needed to understand potentially where you could sell. I would just say try to stay with the overall trend of the day. If the overall trend of the day is higher, we need to be looking to bounce stocks. If the overall trend of the day is lower, then we need to be looking to short those bounces. If the overall trend is choppy, we need to either A, avoid it at all costs, or sit patiently and wait for a proper setup. Now, the reason why I'm making this video and why I took this trade here is when you see here, when we broke down below the 20-period moving average, this linear regression, we were coming down to this Bollinger Band. Now, I had my eye on the options flow, and if I bring up the options flow here, look at this $2.3 million bet that came in at 10:03 Pacific Standard Time. Look at this $1.75 million bet that came in at 10:03 Pacific Standard Time. I would assume this is the same fund, this is the same trader, same institution. But look at the 44.20 calls and the 4400s. Now, if we look at the price of the SPX at that specific time here at 10:03, you can see that was on the breakdown 44.06. You can see the candle, the next candle opens up at 44.05, and we get all the way down to a price of 44.02. So when you start to look at this options flow here, that was coming in for 4400s, coming in for 4420s. You can see another $250,000 bet being placed here at 4400s, another $150,000 bet being placed here. These are all minutes apart, guys, for 190,000. And then you can see You know, a 42, this is very deep in the money, but $33 million, this is deep in the money. So let's kind of just disregard that. But 4,400 strike price here for 450,000, a $4,400 strike here for 1.2 million, a $4,400 strike here for 492. You can just see what I'm talking about here. These puts here could be a little bit of hedges that you see going on here. So they're trying to play the downside on that. But if we kind of look here at the 1002, 1003, 1003, right? And then you got 1013, 1013. They were absolutely starting to hammer the call side. Now, when you see the bounce here at around that time, 1005, 1003, 1010, 1015. So this candle here on would be those 1013 candles, right? And then you start to see the immediate kind of push up, and look at the move that it pushed. And this is exactly when I got in. And what I got in on this play was actually here at that 10:20 a.m. Pacific Standard Time, is because what I was looking for was a green candle close or a takeout of a previous red candle. So if we see the decline, then we see a pause, we see no continuation to the downside, then we get our first green candle close back over, or a takeout over the previous red candle. This is all I do here. I create a hard stop loss. If this does bounce here and then decides to lose this low wick candle here, I get out, because why? Technical analysis tells me that if we do lose this, we've got room to come down to around 43.98, which is that rising 50-day moving average here on SPX's 5-minute time frame. And essentially, as soon as we started to close over this 20 SMA, I just get another pop here and I immediately start to sell out. Now, if I would have held the entire move, obviously we traded all the way up to 44.39, I would have made a hell of a lot more money than what I did. But again, we never know where these stocks are going to potentially go. We don't know that they're going to make a new high of day. But again, the power of options flow. So when you start looking at the options flow, even for example, if you didn't take the aggressive bounce here, what you could have said is put a price level line here, okay, at the current high of day. So if the current high of day was 44.12 and we have calls, $1 million calls, $500,000 calls, they're being pounded one after another on dips. That's what you need to understand. That big money is trading on dips. Yes, they're buying and they're already in the move through breakouts, but a lot of the times, if they're going to hold the market, they're going to be loading up at a cheaper price. What's the difference between someone who's experienced and someone who's not experienced? You want the better price. It's like when you're shopping for a car, you don't want to buy the first car that you see on the lot without ever having any negotiations and just letting the salesman sell you on the car. You want the best deal on the overall car that you can get. And that's just the way rich people do it. Rich, smart, big money is going to get the best price on the stock. They're going to get the best price on anything. They're never going to pay top dollar. The only person paying top dollar is someone who wants to feel like they're involved in the party. But if you ask any wealthy person who is successful, they will always tell you that you need the absolute best price and best deal. So even if you did not take the aggressive bounce here, you could have told yourself, I see heavy options flows holding that $4,400 price level. If we do take out the high of day, I'm going to get long. That came here at 10:40 a.m. Pacific Standard Time. You would have gotten in on this candle here, throwing your money into this candle. We get a close at 44.13. Next candle shoots up to 44.16. Next candle shoots up to 44.17. Next candle shoots up to 44.19. We are talking about a 4, 5, 6 point move on the SPX. Those contracts are going to move significantly. I don't care if you're getting 2, 3, 4, 5 points. If you can get that off of a good setup with options flow behind it, it's definitely something that you got to pay attention to. So anytime we're dipping, look to the options market and start looking to see what options bets are coming. Are we pushing to the downside and they're loading and slamming puts to the downside? That's going to kind of tell you there could be a short-term continuation. If we are trending down and the market is going down, however, you see big money loading into the call side of things, you can expect some type of short-term, I'm not saying that it has to be continuation for days and days on end, but short-term sentiment could change enough for you to get in and skin a little bit of money off of the cat very, very quickly. And that's what it's all about, is getting in and getting out as fast as you can and taking those profits and protecting those profits when you are a scalper and a day trader. Now, if we're talking about swing trading or we're talking about longer term investing, the strategy concepts are a little bit different. But when we're talking about scalping and day trading, it's very, very simple. You want to look to pivot points, you want to look to supply and demand, and you want to see what type of option flow is coming in to back up the break of supply or demand or those specific pivot points. If you guys are interested in trying to learn the strategy and trying to understand how you guys can be more profitable, perhaps, you know, adding an extra $1,000 to the bottom line every single month, maybe that's making an extra $2,000 a month. If that's going to do something for you significantly financially, help you pay a little bit more bills at the end of the month, help you take that extra vacation, put a little bit more into savings or retirement. If you're looking to start understanding strategies and concepts that are going to help you be more consistent, not only technically wise when it comes to trading the charts, but emotionally and mentally, because 90% of this game is handling your emotions once you're already inside the trade. It's not identifying the moves. That's the easy part. It's how to handle taking profits and cutting losses. I will do that and help you with that in Evolution Traders. Make sure you go to evolutiontraders.com, become a lifetime member. Also join the Discord. That link is down in the description box below. You're going to get access to general chat there. You can ask some questions, but if you want to get serious and start trading with other traders who are doing this on a day in and day out basis, and you want access to my watch list and access to strategy help and one-on-one coaching, then definitely take advantage of that evolutiontraders.com lifetime membership, and I'll see you guys on the inside.